Illinois' housing market has been hit with a huge shortage of homes for sale in inventory, which has continued to push home prices up over the last year. With home prices in Illinois up 3.6% year over year, according to data you can find on Reventure app. However, heading into 2024, I believe we will see Illinois' housing market really begin to slow down, and we could see these home prices even start to dip into negative territory, because Illinois' issue as a housing market going forward is going to be a lack of home buyers, because there's been a huge outbound migration from Illinois, with the state losing a massive 110,000 people in the most recent year. Take a look at this, everyone. That's the biggest net loss of people in Illinois' history going back to 1991. You can see this is just getting worse every year in terms of more and more people moving out, especially in an area like Chicago, which you can see accounts for almost 90% of Illinois' population loss. And the math here is simple, everyone. If you have more people leaving your state than moving in, eventually the local housing market is going to take a hit. However, in the short term, over the last couple years, Illinois' housing market has been propped up by this shortage of inventory I talked about before. With only 15,000 homes for sale, according to data on Reventure app, you can see that's way below the long-term historical average and about 65% below what inventory was in 2019 before the pandemic. There was 41,000 homes for sale in Illinois back in 2019, only 15,000 today. So this graph in one picture shows you what the issue in Illinois' housing market today, which is why home prices have kept going up over the last couple years. And one of the reasons that those prices have gone up over the last couple years is because they're actually relatively affordable. Because of that outbound migration and lots of people leaving, Illinois did not have nearly as much home price appreciation before the pandemic as some of the other states in the South did, leaving the values at a much more affordable level to start. Now you can see here, if we head on Zillow and start looking in Chicago, if we go out to some of these western suburbs, some of which are actually pretty nice, there actually isn't much crime in these western suburbs, we can see, you could buy a 3-bed, 2-bath, 1,700 square foot house for $365,000, but I'm not going to call that cheap, because there's nothing in today's market is cheap with mortgage rates nearing 8%. However, I will say that this is at least an attainable home price for some of the families living in this area of Chicago, which is why the buyer demand in Illinois has actually held up pretty good over the last year and a half in this rising interest and mortgage rate environment. This has been one of the big shocks to people who are housing market analysts who are covering the housing market. We're seeing now a city like Chicago has the most durable home buyer demand in 2023 entering 2024, whereas a city like Austin, Texas or Phoenix has had a huge collapse in buyer demand. So we're almost seeing like a reverse of the trend that occurred during the pandemic, where it's actually the cities that people left in the Rust Belt that are performing better from a housing market perspective right now. And the reason that is because the affordability ratios are simply much better. Because you can see, if we look at the home value to income ratio in Chicago, take a look at this, everyone. Right now, the typical home price of $306,000 is 3.5 times the median household income in the metro of $86,000. That value to income ratio is actually right at the long-term 20-year average of 3.4, which indicates that Chicago's housing market is actually fairly valued. It's only about 3% overvalued. The fair value price is $295,000, which is a big departure from the peak of the last bubble. Back in 05-06, in the last bubble in Chicago, prices were 28% overvalued. They crashed. That's not going to happen this time. Prices aren't going to crash in Chicago this time around. Nor are they going to crash in many other parts of the state, because it gets even cheaper once you go to the middle of Illinois. With the home value to income ratio out in Rockford measuring only 2.6, in Davenport, whereas in Peoria, it's only 2x. The typical home value is $142,000, which is only 2 times the median household income of $71,000. If you go down to Springfield, it's 2.2x. You can actually see on a statewide level, Chicago has one of the cheapest home price to income ratios in America at 3.2. I mean, compare this to a place like California, a state that has a lot of the same issues of Chicago. Lots of people leave California. The taxes are high cost of living. Well, a home buyer in California needs to pay 7.8 times their median income income to buy a house. In Chicago, it's only 3.2. And you can see in general, in the Midwest, in this corridor, there's cheaper prices in general. In Ohio, the value to income ratio is 3.2. In Iowa, it's 2.9, which is actually the lowest in America. If we hit table view here on Reventure app, you can see West Virginia has the cheapest home prices relative to income at 2.8. Then you got Iowa at 2.9, Kansas at 3.0, and then Illinois at 3.2, making Illinois the fourth cheapest housing market in America. And look, folks, I'm not saying, it's a great idea to buy in Illinois. All I'm saying is that from a fundamental perspective, home prices there are actually fairly valued relative to income, which is the main determining factor. But of course, folks, I'm not saying it's a good idea to buy in Chicago or Illinois. I'm merely saying that home prices there are actually relatively affordable compared to incomes. And one of the reasons they are affordable compared to incomes is because so many people have left, right? If you have 100,000 people leaving, that's going to make prices cheaper. It's going to lower aggregate demand. In addition, we got to talk about the property taxes in Illinois. This is another big factor about buying a house that a lot of you have to pay attention to, whether you're a regular buyer or investors, how much you can pay in property taxes. And where Illinois really looks bad if we go to property tax rate here on Reventure app is in terms of how high the property tax rates are. Around 2% in Illinois, which means that if you were to buy a house for around $500,000, your property taxes would be 10 grand per year, everyone. That's insane. It's something we can confirm right away. If we look at Zillow, take a look at what looks like a newly renovated home or townhouse of some sort. It's on the market for $560,000, which is actually $170 per foot, which is not bad. However, the estimated property taxes are nearly $11,000 per year. And those high property taxes are also a big issue for investors, because if you're a real estate investor and you want to maybe look into Illinois because the home prices there are more stable and they're not going to go down as much, you're going to have to deal with a lower return due to those higher property taxes. Because when you have to pay a big fat property tax bill, that's money right off the top of your rental that you're never going to see back, which is probably one of the reasons why investor demand in Illinois and Chicago is very low in general. Of course, one very important thing you got to pay attention to if you're a buyer investor in Illinois or any other state is you got to pay attention to the local neighborhood you're looking at. Most of this video so far we've been talking about, the state level, the metro area level, but as you guys all know, there's huge differences in appreciation, in affordability, and safety depending on where you look to buy. And this is something we can figure out very, very quickly. If we go on Reventure app and just type in Chicago here into the top search bar, we can now see all those different zip codes in the Chicago metro, first looking at them by home value. And immediately you can see the areas to the south side of Chicago that have a lot of issues with crime. There's very cheap home prices here, like typical home values of $100,000, $150,000. But the more north we go in the Chicago metro, up towards these suburbs like Northbrook and Deerfield and Lake Forest, we can see actually we have a zip code here where the typical home price is $975,000, which is actually pretty close to what it was at the peak of the last bubble in '07. And interestingly, you can see this zip code was not performing well prior to the pandemic. The values were actually going down. The pandemic caused the values to go back up. Will values in this zip code go up or down? Well, I would again consult value to income ratio. You can see the relationship of home prices to income here is 4.5x, which is well below the long-term average of 5.3. So this actually says to me that this zip code is actually undervalued. 15% undervalued. The fair home value is 1.1 million based off the incomes. And I know maybe some of you who are watching this video out in Lake Forest or another wealthy suburb around Chicago might think I'm crazy for saying home prices there are undervalued because they're expensive, but really it all comes down to incomes, everyone. How much money do people make in the neighborhood? How much money do people make that are moving in? And in that area, the incomes are very, very high. With a median household income of $217,000, an income level which has just shot way up over the last 10 years, positive income growth. And so if you're a home buyer, maybe even an investor, you want to look actually at areas with strong income growth. Income growth is something that's going to be important in determining, the future of home prices and the stability of home prices. So if you see high income growth, a place like Arlington Heights, 35% income growth over the last 5 years, that's pretty good. Or if we head down, maybe actually closer to, Indiana, the Illinois-Indiana border, we see much lower levels of income growth, which are a sign that, the area isn't doing as well. You also probably want to look at population growth too, right? And this is going to be an important thing for a lot of areas in Chicago. We see a lot of areas losing people, right? A lot of areas with negatives, especially here on the south side. We're losing 7% of our people, 15% of our people. We head to a metro like Peoria, you can see the population losses are even bigger. Take a look at this, everyone. Towards downtown Peoria, which is one of the most affordable housing markets in America. Why is it affordable? Well, its population declined by 29% over the last 5 years. And so if you're a home buyer or investor, do not make a decision without consulting this data. I mean, you need to know in your zip code what the income growth trends are, what the population growth trends are, and how over or undervalued home prices are based off those historical income fundamentals. When you know that data, you can make a much more educated decision about what the right move is for you. Maybe you look at the data and you see it's good population growth, good income growth, and prices aren't too overvalued. You say, okay, maybe I'll take the jump now. But conversely, if your area is losing people, the income growth isn't that great, and it's overvalued, maybe you should wait. But really more broadly, the one metric I would really look at if I was someone trying to time the market in Illinois is I would pay attention to those inventory levels, because we're going to need to see the inventory come back up before we see any type of downturn in the market, because the really low inventory right now, which is really a function of restricted supply in new listings, there isn't much home building in the Illinois area. There's not much investor activity, so we don't really have investors selling right now. Really, we need to see just the local owner sell, and it's going to take some time for those local owners to sell their property. They continue moving out of state, and as that train rolls forward, we'll hopefully see this inventory level in Chicago go up from 15,000 closer to the long-term average. Additionally, another metric I'd pay attention to is the price cut percentage, the percentage of sellers who are cutting the price. You can see right now it's 19%. Only 19% of sellers reduced the price in the most recent month. That's below the long-term average of 24%. So we're also going to need to see more price cuts before we see a significant downturn in the market. We're also going to need to see the days on the market increase. Everyone, take a look at this. The typical house in Chicago lasts 37 days. That's way down from the long-term average. It was 51 days before the pandemic. We can see really low DOM in pretty much all these metros. Rockford, Rochelle, Dixon, 31, 32 days. And amazingly, Illinois is one of the lowest days on the market in general in America. Again, if we go back to table view, we can see Illinois is the 6th fastest housing market in America right now at 38 days. Only Maryland, Rhode Island, Ohio, Massachusetts, and New Hampshire have a lower days on the market. So I think my 2024 housing market forecast for Illinois is going to be home prices that are flat. I think we'll see the appreciation go away. I think maybe we'll see downturns happen in certain pockets of cities like Chicago, maybe the areas that are most overvalued. But I don't think we're going to see a big decline in prices in Illinois in 2024, unless there's some type of major recessionary event that causes lots of local job losses. Maybe that could unlock some home price declines. But largely speaking, this is a housing market that actually is not overvalued. It's one of the few housing markets in America that isn't overvalued. So I don't think there's going to be a major crash. However, I also don't think there's going to be much long-term home price appreciation due to all the people moving out and the high property taxes. This is an area that tends to be very steady, and I think that'll continue into the future. And one thing I would just encourage you guys to do if you're a home buyer in Illinois or any other state in America is to go on Reventure app, www.reventure.app, and look at all of this data for yourself for every state, metro, county, and zip code in America. You're going to want to understand the days on the market, the price cuts, the inventory. You're going to want to understand the home values and the overvaluation rates and the value to income ratios. You're going to want to understand the population growth and the income growth. I don't really see how someone could make a decision to buy a house or not buy a house without consulting this data. And the great thing about Reventure app is there's 2 different plans. The first is free. Become a free member on Reventure app. You get access to 8 data points for free. But if you want some of the more advanced data that I showed you in this video, you'll have to become a premium member, and that comes at a cost of $39 a month or $399 a year, which is ultimately pretty cheap compared to the cost of buying a house. Pretty cheap for peace of mind about making the right decision. So go to www.reventure.app and create an account today.